Welcome to Deep Dive with MNCL, where we don't just discuss companies, we dissect them.
Hi, I'm Shivani Kumari, a research analyst at Monarch Networth Capital Limited. Today, I'm here to discuss SeQuent Scientific Limited, a leading animal health company that is among the top 20 global players in this category. The animal health market is experiencing robust growth driven by rising pet ownership, heightened awareness of zoonotic diseases, and increasing demand for protein. SeQuent Scientific Limited, a global leading player in animal health, specializes in developing, manufacturing, and marketing veterinary products. As India's only US FDA-approved veterinary manufacturer, SeQuent Scientific operates 7 state-of-the-art manufacturing facilities. SeQuent Scientific's animal health portfolio includes formulation, which contributes 76% of sales, and APIs, which account for remaining 24%. As India's largest manufacturer and exporter of animal health products, SeQuent offers 1,000 finished dosage formulations and more than 35 active pharmaceutical ingredients. In the formulation segment, Europe is the largest market, followed by LATAM and emerging markets. For the API segment, over 2/3 of revenue comes from regulated markets, including the US and Europe, with the rest coming from semi-regulated and unregulated markets. This strong presence in regulated markets enables SeQuent to secure better pricing, high margins, and access to stable markets with opportunity for long-term partnerships. SeQuent Scientific is positioned for strong growth driven by recent development such as the announcement of merger with Viyash LifeScience. While we'll delve into the merger shortly, let's first explore SeQuent's strategic initiatives. The company has refined its product mix in recent years by phasing out low-margin offerings and prioritizing high-margin products, particularly in the companion animal health segment. The company is also focused on cost optimization through backward integration, enhanced capacity utilization, and seizing growth opportunities, including expanding its CDMO capabilities. These efforts have resulted in a steady improvement in performance and profitability, with EBITDA margin rising to approx 11% in H1 FY25 from approx 1% in H1 FY24. SeQuent's current market capitalization stands at approx 45 billion rupees. In September 2024, SeQuent Scientific announced a merger with Viyash LifeScience, valuing the combined entity at 80 billion rupees. Viyash LifeScience, a key player in human health, is an integrated pharmaceutical company with a strong and diverse portfolio spanning APIs, intermediates, and formulation. The company operates 9 US FDA-approved manufacturing facilities and serves a broad range of therapeutical areas across global markets. Its product portfolio includes over 70 commercial APIs and over 30 solid dosage formulations, showing its extensive capabilities in the pharmaceutical sectors. This merger aims to harness the combined strength, resources, and expertise of SeQuent Scientific and Viyash LifeScience, forming a stronger and more competitive entity in pharmaceutical sectors. By integrating complementary capabilities in animal health and human health, the merged entity is well positioned to capitalize on US $1.5 trillion global pharmaceutical market, 30 times larger than the existing opportunity in animal health segment. We project revenue and EBITDA CAGR of 15% and 46% respectively for FY24 to FY27 for the merged entity. The balance sheet is expected to strengthen significantly, with the company projected to achieve a net cash position by FY27. Furthermore, return metrics are set to improve, with ROE anticipated to increase from negative 2.4% to 12.1% and ROCE from 0.1% to 15.5% in the same period. At Monarch, we believe SeQuent Scientific is strategically positioned to seize significant growth opportunities. The merger with Viyash LifeScience marks a pivotal moment in the company's transformation journey. With improving profitability, a projected net cash position by FY27 and a free cash flow generation, we anticipate a strong case for re-rating. We value the merged entity at 17 times FY27 EBITDA to arrive at our target price of Rs 275 and have assigned a buy rating to the company. Thank you.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
If you thought this was insightful, you wouldn't want to miss our detailed report, where research is king, always.